Hello, hello, hello. YouTube, I missed you. How's it going, everybody? Can you guys hear me? Audio check. Visual check. You guys hear me this time? Bad news? You guys want the bad news first? Or do you guys want the bad news at the end of the night? It's not like bad news. Sorry, I just swallowed water down the wrong pipe. Welcome to the Capital Hungry live market analysis stream. It is currently 1:40 a.m. Eastern, Thursday, May 13th. We have 20 minutes until German market open pre-London hours. We're going to be taking advantage of some potential intraday trade ideas and scalp trade ideas with London volume if we get the confirms. I need everybody to first take a second to read the description and also go over the nitty-gritty stuff, such as the basic stream reminders. A lot of you guys have the awareness of a goldfish, you know what I mean? They'll have all this information in front of you, all these resources and links for you to learn about trading, but like your eyes just don't see them for some reason. So this is not direct financial advice, but feel free to ask questions about technicals and fundamentals as well as overall markets. Do not ask for direct signals. Really? Goldfish are smart? We'll just stick to being the hyenas then, all right? We'll stick to the hyenas. All right, feel free to ask questions about the markets, but after I go through the analysis. Like, for example, some guy already spammed 10 times, will US 30 go lower? All right, that guy, he's not, look, he just sent it again. So this guy, he's not reading the stream rules. He's not reading the description. His mind is focused on US 30 and what he needs to do, and he's just spamming the chat. All right, please take a second, breathe. We will get to US 30 analysis as we go through our process. We start with gold, then GJ, GBP USD, Euro USD, USD CAD, then US 30. All right. Jew said he must be in drawdown since Monday. All of the resource links, Capital Hungry News Twitter, this YouTube channel itself, the free Telegram analysis, it's all shown there. And I'll also show you guys here. You got the YouTube page where just tons and tons and tons and tons of endless value. Telegram. Yeah, the hyenas be going crazy. And the Twitter. Sorry, the Twitter. Headlines, analysis reminders. You know what I mean? People giving me compliments. People also sending me a lot of hate comments. I post those too. But a great resource. Forex Factory also sources from our Capital Hungry News Twitter. Sometimes I post stuff like this to teach you about how inflation works, the dollar, if you're into that stuff. Oh, hello, Miss Addie Garcia. What are you doing, lady? No, I got a girlfriend. Let's see your picture though first. Maybe. No, I'm just kidding around. I got a girlfriend. Just trying to be a little bit entertaining. Farrah's like smash. Make sure you guys follow all of these resources here. It's all at your disposal. What's the news? We're never, bro. The news is the Capital Hungry News Twitter. All of the links to everything are in the description. This guy's like, please put it in the chat box, please. You guys, everything, it's even on your screen right there, right on the layout. It's right on the layout. Do you guys ever read the stream layout where it says live breaking news? Then the Twitter, Telegram, contact. Okay, perfect. Now that we got the nitty gritty out of the way, for the private chat aristocrats, the elites, the private chat Illuminati, as well as the YouTube hungry hyenas and hungry hippos, don't forget, as manual traders, we have something called emotions and feelings that sometimes get in the way of our logical decision making process. This can be absolutely destructive to your trading as well as your long-term goals. So the best way to avoid this is to follow your trading plan, follow your risk management plan, focus on the long-term vision, keep emotions out, and avoid crashing your account. Muck TI, I hate fundamentals. Please don't tell me it's impossible to be trading fundamentals. It's not impossible, but I would rather live life with two hands instead of cutting one of my hands off. You know what I mean? You only got one hand. You can't wipe your ass and be on your phone. You got to do one or the other. But I got two hands in the markets. I got my fundamentals and my technicals. Two hands. You got one hand. Can you still survive with one hand? Yeah, why not? Is it the best options for survival? Probably not. You know? But yeah, let me give you guys that little seizure for the YouTube audience. Perfect. Now, some recent fundamental points. If you guys know about sell in May, go away, it's actually in effect right now. We're seeing some short-term fear, uncertainty, and doubt regarding global inflation increases that's causing some pullbacks on our stock markets, as well as short-term increases on the US dollar value as well as a safe haven currency. So we're seeing around our global stock markets, we're getting a pretty aggressive pullback. But what we want to identify when we look at our global stock markets is, one, where is that pullback coming from? And two, has that pullback broken higher time frame structure? All right. The continued focus is still on vaccine rollouts and distribution. There's obviously mixed concerns about the inflation increase in the US, as the CPI data from earlier at New York session showed that inflation in the consumer level is as high as it was during the 2008 financial crash. But then we had the Federal Reserve speakers come in and play damage control and say, no, don't worry. Inflation is still very much controlled. It's all good. We also have a lot of Middle Eastern tensions rising, but nothing that has led into massive main stage conflict, where I know there's constant bombs going on in the Middle East, but it doesn't have market impact until the US or European countries get involved on the main stage. When you start seeing the US getting involved in the conflict on CNN, then Middle Eastern tensions are really rising. Okay? As per economic events overnight for May 13th here. Okay? Now, we don't have any economic data to focus on through our London and Euro session. We're primarily going to be watching the reactive headlines to the left, where here you can see the newsroom. For example, Bank of Japan Governor Kuroda just says, does not have automatic set rules when it buys ETFs. It was also talking about how Bank of Japan's ETF buying does not intend to push up stock prices. For those of you who don't know, that's exactly what it does. when this Alvarez, you guys got access to the report sent at the start of every week. You're in the private chat. You can just open that PDF with the economic events, political speakers, everything, bro. This guy's like, all right. But this headline, anybody who has gotten to watch the Princes of the Yen documentary, put a 1 in the chat, whether in the private chat or in the YouTube chat, if you watch the Princes of Yen documentary. Don't lie either. If you did, you're a real one. Okay, so the Princes of the Yen documentary, you guys know, was obviously about the Bank of Japan. So as the way the Bank of Japan has been inflating the markets, and the way any central bank inflates their respected stock markets, is by purchasing the stock market ETFs. So they take their increase in currency supply. For example, the Bank of Japan takes their printed out Japanese yen, And then they put that in the economy through several fashions. One, by giving it to the government through government bond purchases, which is just debt the government's going to owe back to the central bank with an interest rate on it, right? But the government gets to use that money for whatever purpose in the economy. Two is through corporations and corporate bonds. And three is through the purchases of stock market ETFs, which goes directly into inflating the economy. So think about a headline like this. Bank of Japan's Governor Kuroda says Bank of Japan's ETF buying does not intend to push up stock prices. See how the central bank uses these types of words to avoid what they're doing and to make it seem like they're not trying to manipulate the market or push it up to a certain perspective. It's just they're just the way they're trying to phrase it is they're just doing all this to help the people. They want the economy to recover. They're trying to help the people. They don't care about the stock market. The stock market being so bullish has just been a byproduct of them helping the people. Do you get what I'm saying? Where it's actually the exact inverse. Cap, exactly. Alvarez gets it. So they're appealing to the emotions of the masses by saying, look, we're helping you guys. We're trying to bring jobs back. We're trying to open the economy. When in reality, they've been absolutely flooding the stock markets. And we've seen the gains the financial markets have had across the board. Okay? Like this is Japan, for example. China, overall structure, USA, Dow Jones, UK. Every single stock market index in every single region is above pre-pandemic levels. Insane, right? Insane. Okay, but other economic events we have, we don't have anything overnight. The US initial jobless claims, 8:30 a.m. Eastern. U.S. Producer Price Index at 8:30 a.m. Eastern, which is going to be showing the inflation from the producer side now. So it's also going to be showing an increase, in my opinion, as well, with the overall cost of production increasing. At 12 p.m. Eastern, the Bank of England Governor Bailey speaks. Okay? Now, we're seeing the classic sell in May and go away, but what we have to understand as we're dissecting our stock markets is these pullbacks that we're seeing across every single region. Where is it coming from? Is it coming from a lower low and we're dropping more? Is it coming from some random consolidation zone, or is it coming from all-time highs pretty much across the board? Right? Whether these are the stock markets, whether it's for USA, we just use Dow Jones as an example. Yeah, COVID was 100% a financial market setup. Okay? So, as we entered May, which has already been historically known as a decline month for global stock markets, where that saying comes, sell in May, go away, we're seeing that profit taking is happening from these all-time highs. But we have not broken bullish market structure across the board yet. I know Japanese yen might look like it's breaking the trend line, but this was the last previous consolidation zone that led into a new high. So obviously China's not close to retesting the structure. Australia is the last sensitivity point here. Germany as well. So none of our stock markets yet have had any fear, uncertainty, or doubt strong enough to break the higher time frame bullish market structure. And I'm going to show you guys this as an example more on Dow Jones here, where you look at the Dow Jones structure after the 2020 crash. We still have this long-standing bullish market structure intact. Ever since the circuit breaker was hit at the 18K lows, these aggressive pullbacks at around 26K, the pullbacks from 31K, now as we approach potentially 33K, this is a potential great dip buy area on the stock markets that we're coming to potentially take us back up to revisit highs, right? The US stock market, especially as the central bank started to support their respected economies, we started to have the pandemic fear get priced in and digested by investors. we had a flood of vaccine headlines. We've only had continuous highs printed with pullback phases and continuations up to those previous highs, whether the pullback lasts hours or the pullback lasts potential weeks. Okay? So we're going to be talking about that US 30 analysis, but I just want everybody to understand that we have not had a break of higher time frame bullish structure on our equity markets, and the Japanese yen by itself, when we're looking at the Japanese yen currency index, is still very bearish. We know the Japanese yen, the US dollar, the Swiss franc are safe haven currencies. These safe haven currencies are primarily stronger or seeing more liquidity pooled into them when there's times of economic uncertainty. Without that economic uncertainty, we've had the US dollar relatively bearish, especially if we don't break the 90.935 point. We have a lot of potential to continue back down to these lows. The Japanese yen looks like it's going to revisit these 90 flat lows, and the volatility index has not broken bearish market structure in an extended period of time, showing no real long-standing fear in the North American markets. Okay? Now, understanding that the Japanese yen is still bearish, understanding that yes, we're having this aggressive pullback on the stock markets, but nothing that's breaking overall structure. When we look at GJ, who remembers the last trade idea webinar I did in the last London session? Who was here for this one? Who was here for this one? And this one? Private chat, obviously you guys were, but okay, so remember we were looking for, as we broke into these highs, we were looking for a retest of the previous highs to the left for the new daily candle, then continuations up. So that trade played out 100 pips from 153.2 area all the way to 154.2. We got the retest of previous highs after having the clean breakout above there, maintaining overall bullish market structure. So just quickly for this guy, but I'll come back to do our GJ analysis. The volatility index is the inverse information of the S&P 500. Whenever there is massive short selling in the US stock market, this means there's a bullish spike in the volatility index because investors use the volatility index to read fear or optimism within the stock market. So stock market isn't supposed to have massive short selling. That means something's wrong because stocks only go up. That means there's some catalyst causing that massive short selling. Otherwise, why would people sell stocks? Do you get the mindset behind that? So that's why the VIX is the invert. Whenever there's massive short selling in the volatility index, whenever there's massive short selling in the US stock markets and exiting of buy positions and stocks going down, volatility index goes up to show market fear. That's why the same time Dow Jones had that pullback to retest structure, volatility index also had this pullback from lows though, from new lows printed. Understand? Okay, so GJ, those buys from the last stream played out extremely well. When we got the retest of these previous highs, we had a nice retest in a consolidation zone created now as well. What would be ideal is if we could get a retest of these highs around 153.8 to the top of the order block, then continuations up, or if we can even create a support around 154. So I'll talk about the gold spikes after we do our GJ analysis of exactly why gold did what it did today and the fundamental reasons that were behind that. All right. So now higher time frames are very bullish on GJ. We don't have to really look at that every single time, but you're only seeing pullback phases or consolidation phases and continuations to the upside, right? We have very strong bullish market structure. We broke above previous highs. We've even made a support level above previous highs now. When we're starting to look at and zoom in more to, when we're starting to look in and zoom in more at the hourly price action now, we can see that the bullish price action is very clean. You have this consolidation zone, consecutive bullish candles, consolidation zone, consecutive bullish candles. The candle started to get weaker and weaker here, and then we had a bit of a stronger bearish candle now, which tells me if this bearish candle closes a bit, if this 4 hour candle, I have to go to the 1 hour here. If this 1 hour candle closes below 154 area, we will get a deeper pullback to 153.800. So this is what I'm essentially looking for. Now when we're looking at these areas of interest, because we can see the consolidation zones, order blocks, and areas of price sensitivity. Now, this is a high risk, high reward buy area here. It's a make or break point, as well as safer buys above these previous highs at 154.300 area too. If we push down to here during pre-London hours and fail to break and create a support, I would be looking for buys back up the range like we've seen how we've been bouncing in here for an extended period of time now. As long as we don't have any hourly candle closures below this range, then it looks good that we're just going to have this continued little consolidation bounce, similar to what we saw previously here. The issue is a lot of traders who just trade technicals, they can get confused by this and say stupid things like GJ's too high. What the hell is this, a new hourly candle? 2 a.m. already pushing like that? They'll say GJ's too high. GJ needs to come down. It's too bullish. There's a resistance forming now. It's time to sell. No. The market either moves up in an impulsive wave, pullback and continuation, or impulsive wave, consolidation phase and liquidity grab and continuation. Right? We have not seen any breaks of structure here. We've actually only seen exactly what I just said. Here you had your pullback continuation. Here you had your consolidation zone. And then breakout of the highs. Everywhere here, people are like, it's sell time. No. Then you hear same thing. You have a consolidation zone. You don't have a break to the downside of it. Right? So now same type of idea here where we're getting a smaller consolidation zone and order block. And we can see that 153.800 is obviously a psychological price level that we like to use. So if this hourly candle closes below 154 area, then we do have the possibility of a sell scalp down to 0.800. But this itself is a key decision point. That's primarily what I'm looking for. We can take advantage of that sell scalp, but I would be looking for continuations to the upside personally. Pullbacks and continuations. I don't want to fight the trend. I don't want to fight the fundamentals of a weaker Japanese yen and overall still optimistic markets. We've had buyers still keep continuously printing new highs. Any sells have only been short-term pullbacks, nothing more, nothing less. I'd only be looking for long-term sells if we came back below those previous highs at 153.5. Okay? This is the only area I'd be looking for longer-term sells with a potential deeper correction. Everybody got that snapshot in mind for GJ, because this is the intraday trade idea and analysis, and then we want to zoom in the lower time frame to start looking for actual confirms. Okay, now alongside our psychological price levels, Now on the 1 minute time frame, I'm a little bit iffy about this candle right now just because it's pre-London and it doesn't have a lower wick, but I'm looking for these types of confirms of a support formed on the lower time frame here for those 154 entries. I would want that consolidation support form, then take the buys out. Here I would want the breakout, retest buys like that. I'd only be looking for sell scalps with this sequence of events. We would have to have a clean break of the PPL and these 1 minute price sensitivity areas like this, a retest, then continuation down. These are the options we're going to be waiting for. Exact same thing I just showed you on the Umrit. Can you stop fucking spamming pray for India to recover from the Wuhan virus in my chat? Fucking really disturbing us right now, right? We're trying to trade here. Like, nobody's gonna pray for India now. I'm Indian. I'm not even gonna pray for India now. I'm gonna pray for your demise now. Pray you catch the virus. No, I don't want people to report me and shit. No, but seriously, stop spamming the chat, bro. This isn't like a COVID fucking stream. This isn't the World Health Organization, all right? This guy. This guy thinks we're the World Health Organization, like we could help him out with something. Okay, GJ analysis makes sense, everybody. I'm in more of a bullish bias. I'm looking for these buy points. Even if we take advantage of these sells down to 0.800, I'm still looking for buys at 0.800. And I'd only take advantage of this potential scalp play with momentum. We don't have any confirms for entries yet. It's still pretty early. It's only 2:05 a.m. Eastern right now. Okay, everybody's asking, Jeev, man, what happened to gold? Jeev, man, what happened to gold? It was so crazy today. Do you guys want me to explain why gold went up and down 200 pips and then ended up coming down instead and breaking below this order block? Do you guys want me to explain the fundamentals, or you don't give a shit? Okay, so at 8:30 a.m. Eastern New York time, we had the Consumer Price Index for the U.S. economy, U.S. economic data, CPI, right? The Consumer Price Index measures the change in inflation or the cost of goods from the consumer perspective. The massive increase in US dollar printing, like I've been telling you guys, has led to a huge increase in inflation overall. The inflation, like you can see this headline from 836, if you guys see this headline, 836, 1 year US CPI increase was the largest since September 2008. That means the inflation now in 2021 was at 2008 levels. What was 2008? Should I play the Jeopardy music? What? Remember 2008 was the previous market crash. Okay? So what happened here was this spike down initially to these previous lows in this price sensitivity area was nothing but a price grab. All that was an initial liquidity grab. Okay? So you had a liquidity grab come to the lows, and then remember what I taught you guys is a bullish confirm for gold. How investors hedge against inflation risks or inflation increase risks. They buy into gold. Right? So what you had happen was at 8:30 a.m. Eastern, the CPI report was released. You had a manipulated liquidity grab to get buyers in from better price points, almost $10 down. But as the inflation was the largest increase since 2008, That's a bullish confirm for gold, and you had buyers take us back right to the highs. Are you guys following me so far? Because now I'm about to explain step number 3. So 1 was the spike. 1, the spike was a liquidity grab, price setup. Get buyers in at a better entry. We pushed up to the highs, number 2, because of inflation being as high as it was in 2008. 3, we came right back down because as we came back to revisit these previous highs, we failed to break. We had buyers take profit as well as... How the fuck do you spell this? As well as at New York Stock Exchange Open, which was over the next hourly period, we had the Federal Reserve speakers, in this case Clarida, say that inflation expectations are essential. So she said the risk of persistent upward drift in inflation expectations, they're fine, we can use our tools. So those inflation increase fears got waved off by the Federal Reserve speaker an hour later. Mainly this one, which caused us to go push up to grab this liquidity grab high, close back in the range, and then her comments caused us to go break lower. Does that make sense to everybody? 1, 2, and 3. In Capital Hungry, we didn't take shit on this move. I didn't advise anyone to trade it. We didn't trade it. It was way too hectic and messy. You know what I mean? But does that make sense? Number 1 was the liquidity grab spike down at the release of news that didn't break this price sensitivity area and those previous low areas. Number 2 was gold buyers jumping in from that low with the increase in inflation from 2008, taking us right back to intraday highs. Number 3 was not having enough fundamental catalysts to break higher because the Federal Reserve speaker waved off those inflation concerns and said, don't worry about it, inflation's still okay. Understand? Private chat aristocrats. I explained it in the banter chat, but maybe it's better to understand visually now of why, because you can see the time frames of 8:30 was the data release, 9:40 she started speaking as soon as we peaked those highs. So it is very manipulative because in my opinion what she's saying is incorrect. It's a lie because the data shows inflation's as high as it was in 2008. It shows consumer inflation and cost of goods for consumers is increasing. Now, here's the kicker. This is how the middle class and this is how the poor get poorer and the middle class get more fucked. This is the kicker. The massive increase in printing of the US dollar decreases the value of the dollar, which means the purchasing power of the dollar decreases. So this is a double dildo for the middle class. You have an increase in the cost of goods, but you have a decrease in the purchasing power of the dollar. So all that money that people think they've saved, that they think they're getting from the government, is going to be spent back faster than they got it because it has less purchasing power than it did a year ago. And the cost of goods are increasing, which we're seeing the impact of inflation. I'm being serious. Like that's the kicker. That's how they get tricked. I'm not like trying to joke around here. That's how they get fucked. The buying power of the dollar gets lower, but the cost of goods gets higher. It's like you're getting fucked on both ends. And but the government tricks you into thinking, but wait a second, look, we gave you that money. We were trying to help you out. But if they never printed out that money, you wouldn't even have this impact. It's all preset economic cycles. Preset market cycles, economic cycles. The fundamental catalyst is just it could be a war, it could be an economic crash, it could be a pandemic like we saw. The fundamental catalyst changes, the story is always the same. You know? Max, shut the fuck up, man. I'm trying to explain economics and you fucking send a retard comment. You know, on Robinhood they give you buying power. Max so dumb, bro. I shouldn't have made this guy a mod. Yeah, R-Mac, bro. He's like, you know, Robinhood gives you buying power? Always gotta be it. Yeah, man. I just gave an economics lesson that you wouldn't even get in school, with describing the impact on gold as well. And that's what you say, Mac? That's why you're lost, bro. You're lucky I gave you that Asian stage. I can take it away pretty quick too, alright? Don't get so cozy. Alright, now, okay, so GJ, it looks like we're gonna get the pullback to 154 anyways. Don't mind the trend line. That was just to identify structure here. We would have to break below 154 to validate a break of lower time frame bullish structure where we take that squeeze down. So if you want, I can delete the trend line. This is the last higher low point or price sensitivity area where we at least revisited the previous highs, you know? Interest, okay, so whenever there's economic uncertainty, to promote the lending of banks and business to business transactions and bank to bank transactions from a commercial level, and to help money flow in the economy, central banks cut interest rates. So that's why when you saw the pandemic impact happening, or even a bit prior, Federal Reserve was already cutting interest rates. You know? And then the way they reset this when the economy started to rebound years later after economic crisis is by increasing interest rates. Interest rate decrease or increase is just a monetary tool the Federal Reserve has to influence the price of the dollar, or to promote the US economy, or to deflate the economy. They're control tools, whether it be quantitative easing, interest rate usage, tons of other things too, yield curve control. These are all monetary tools the central bank uses at their disposal to control the global, to control their correlated economy. So for Federal Reserve, US, Bank of England, UK, ECB, Euro. Okay, so now let's look at gold here, because it's very interesting that we have to be cautious, because look, let's go to the 4 hour on gold. Ever since the 2075 highs peaked, we've had gold in this higher time frame corrective structure, and we came pretty close to retesting that bearish market structure around the 1850s. But we're still maintaining bullish market structure even if we come down to about 1803, 1805. We're still very bullish on gold. When you're looking at these previous upside runs, for the example, like on here, we haven't had a break of structure yet. We've just had a pullback from the high created. So here you had something similar. See how you had a high printed here, but then you had a break of structure here? Now we're having highs printed on gold, but we still haven't broken structure or broken above the previous highs where we led into this new high yet. Right? So when we're looking at gold, we're starting to have a bit of a consolidation, but we're still very bullish as per the intraday structure. If we break below these current lows, then we're going to take sells down below 1812. down to 1800, retest of higher time frame structure. If we break below 1812, then we're going to take sales down to 1803 and look for better risk versus reward buys down there. Otherwise, if we break above or retest 1820 or come above 1828, we're taking buys above here as well to previous highs. GJ's at 154, but we don't have the confirms for an entry yet, so don't worry about that. Okay, so gold, does that make sense? If we break below 1812, which is a higher time frame key level, you can see the price sensitivity to the left as well. Then we're going to take sales down to 1800, retest of these previous highs. To set up better risk versus reward buys here. All right. Otherwise, I'm looking for us to come above an 1828 key level to take buys up to these highs. Safest long-term buys would be above 1845. And I only see long-term sells on gold below 1770. Even though the Federal Reserve speaker tried to wave off those inflation risks, the pullback still didn't break overall higher time frame structure. So either we take sells below 1812 to 1803. At 1803, 1800 area, we look for better risk versus reward buys. If we don't break below 1812 and we come above 1828, we're taking buys above 1828 to 1845. Safest buys above 1845. Any questions about gold? Keep in mind, we still have another 40 minutes until London Open itself. So the reason why I like to start these streams earlier, or I like to do a trade ideas webinar for the private chat ahead of time, is so we can have pre-planned analysis as we're going into the session. So we do our pre-planned analysis now, lay out our execution points of interest, and then through London session with volume, we wait for our confirms to execute. If we get our confirms, we execute. If we don't, then we don't take that trade and it's a no trade day. What the hell is this? So these are higher time frame key levels, and we're looking for either this honestly, even if we get price action above 1820, we should start looking 1828 as well. I like how this 4-hour candle and the hourly candle grab liquidity here too. I forgot about the 1820 key level. That's my apologies. I sent that to the private chat that we would look for buys in that area, but we had very messy price action on the hourly time frame, which you guys will see here. I got like a 20 pip scalp before, but I am liking this. So obviously on the 1 minute time frame, we'd have to watch 30 pips up. I am liking the order block forming right below the key level as a support. You can see from the 1812s area. So if we get any lower time frame break and retest above 1820 as well, we can potentially take some buys there. There's no confirms right now though. You know? only sells below 1812 at this point, just with the price sensitivity and consolidation zone order block we're creating here. So let's keep this on the lower time frame. Right now, this isn't the best price action for our entry. If we could get a bullish engulfing close, and then the next candle doesn't engulf lower, that would be a better entry. Like if this candle can close engulfing this bullish one, and then the next candle makes a quick lower wick and starts to flip again, that'd be a good entry. But right now, when you're looking at the price action, you had this push, this weaker, this aggressive bearish candle, very aggressive bearish candle closing right above the key level, and a weaker bullish candle with the wick here, you know? Why does the US dollar gain strength when CPI comes out greater than expected? That was primarily because of the Fed sentiment increasing the demand of the dollar in the short term. So that's why as gold dropped, the dollar went as gold dropped back down, the dollar went up. We might get some gold scalps pretty soon, actually, guys. If we break above here for entry points, if this candle closes bullish above here, I want to start to see a little order block forming. But let's go check out our other pairs, because let's be patient as well, because we still got 36 minutes till London Open, and we still got a couple of other pairs to look at here. Let's look at the price action on GJ as well. If we create a double bottom here, then come back above 154 for the scalp buys. That's because, oh wait, Muck. Wait, Muck, you want me to answer your fundamental question? I thought you didn't care about fundamentals at the start. Now you asked a fundamental question. Okay, Mac, I'll fucking look at your chart, bro. Keep spamming your chart, man. I know, but okay, this is because of the impact the data has on overall sentiment. Investor behavior and market sentiment is very key. For example, let's just say during New York session, you have extremely optimistic data over vaccines in the US. This extremely optimistic data over vaccines in the US is still going to weaken other safe haven currencies like the Japanese yen or the dollar. So that's why a pair like GJ will still go up on that vaccine news, even though it might be only impacting the US. It's about how the money flows through the safe haven currencies to the risk currencies, equity markets, and about investor sentiment. So that's why you can have these lingering effects of economic data on other pairs, especially if there's a safe haven currency in it. You know? Holy. What's this guy want? People have been sending me a lot of partnership deals, but they don't really tell me what they want. I hate when they don't tell me what they want, but it's all good. All right, man. Who else we got? Oh, you tried to enter here. For me, I know you're not in the private channel, but I have 1820 as a key level. So on the trade room, I was telling our chat that we had a nice 30 pip squeeze, but we were getting some very messy 1 minute price action exhaustion at the time here. Right? So this is what I sent to the private chat, because we were looking for buys above 1820, and I personally got about 30 pips here when we got the break and retest and the little order block formed above it. But I started to notice 1 minute buyer's exhaustion at 1823 and the hourly candle closing below it. So it was a bit of a rushed buy because of the exhaustion on the lower time frame here, as well as breaking and retesting below 1820, bringing us back in that intraday range. So that's what I was telling everybody, be very cautious because the hourly candle looks to close back below the range or right on the level with the exhaustion we're getting at these 1 minute highs. You can see you were having consecutive bullish price action. You started to create a bit of a resistance where you broke to the downside of it. Stronger impulsive bearish candles after that. Break and retest below the key level. And then we came back just to that price sensitivity area and bounced up so far. Okay, GJ, if GJ breaks above 1 minute, a 1 minute candle closes above 154.04, and then the following candle does not engulf back in the range, I'd be looking for buys on GJ. No confirms yet. We still have, I want to see how this 30-minute candle closes, if it closes below the level or not, or right on the dot there. No. See, because your key level's at 1821. My key level's at 1820. So I saw this as exhaustion. You know what I mean? And especially for you, you have to get used to reading the price action when you're looking at this, and then you break back below your EMAs and even break and retest below where you're looking. You should start to. Okay, so I'm gonna give you some tips here. The beautiful thing about the 1 minute time frame is when you start seeing momentum going against you, and you start seeing the consecutive bearish candles, weaker bullish candles, price coming below your EMAs as well, that you like to use as an indicator, you can exit your position at maybe a 10 pip loss max instead of letting it go all the way down to your SL where you're not validating the buyer's momentum anymore. You know? Okay, so the 30-minute candle closed pretty much on the level here. Not the cleanest price action to start buying yet. I would need to have closures above these candle body highs, like I'm telling you guys. Otherwise, we're going to go down to 153.8, but we still have 29 minutes till London Open. I'm just going to finish off doing the analysis on the other pairs here. US 30, let's take a look at because a lot of people are spamming the chat over that. These are the US 30 key levels. You can see from these highs, all-time highs on Dow Jones, 35K. Sell in May, go away. We had profit taking by buyers, break of some intraday bullish structure, and this bearish corrective market structure intact so far. Right? Okay? All right. So I'd only be looking for buys on US 30 if we can validate more buyer order flow in the market, which would come from first the support being created, then a break out of this corrective structure to revisit us back to previous highs. Meaning my buy area is 1 hour candle closures above 33,800. Okay? Otherwise, if we continue to respect... What the hell does this guy want, bro? Huh? Oh, who's this? Okay, otherwise, if we continue to reject 33,800, I'm looking for sells from 33.5 down to 33.2, 200 point range. Otherwise, if we break and retest above 33,800, taking buys back up to all-time highs. Okay, let's look at GJ here. GJ's looking a lot better if this candle closes bullish above this little order block here. What the hell is this? As long as this 1 minute candle doesn't engulf back in this range, I'm going to be looking for a GJ scalp entry. But I'm waiting for this next one, this 1 minute candle to close. If it closes bearish, I'm not entering yet. If it closes like this, weak bearish, I'm looking for an entry if it closes weak bearish like this. But keep in mind, not to rush it. We still have 26 minutes till London open too. I'm just liking the price action we're potentially creating at 154. I just want some consecutive bullish candles. I don't want any bearish candles to close back in this little range. Oh yeah, Euro USD. Okay, okay, I'm not gonna take GJ yet because I gotta look at the charts, but you guys know what to look for. It's also better just to wait for London open another 25 minutes anyways, all right? Let's just go through the analysis here. So Euro USD on the higher time frames is very bullish. I want to start reaching the previous highs we printed around 1.235, 1.24 area. Okay? Yeah, GJ, let's just wait till London open. Don't rush, no FOMO. It's only another 25 minutes away anyways, so no FOMO. We still have volume coming in at London open anyways, all right? It didn't look too clean to me anyways yet, and I think we'll get a better setup at London, so let's wait for that. But Euro USD, obviously on the higher time frames, we're very bullish. This was the last higher low point that led us into these highs. So even though you could draw out a trend line like this and say, oh, the trend line's starting to break, the trend line's starting to break, higher time frame bullish market structure wouldn't be broken until you get breaks below that price point. So you can see from this price point, we led into these highs. Then we had profit taking by buyers bring us right back down to that demand area, and buyers jump back in the market sense, right? Now we have more refined bullish market structure developing as well, where if we have US dollar weakness overnight and a support created here, potential buys back to these highs, and safer buys if we break above that area. This is going to depend on if the US dollar is either bearish or bullish overnight and how equity markets run overnight as well. Okay? So GJ wasn't looking clean. Like I said, it wasn't looking clean. We hopped back in this range. This is looking like it's actually going to come down to give that deeper wave down to 0.800 now. Especially if you didn't break these 1 minute highs and you break below here. But we're going to wait till London open. Holy, a lot of people spam messaging me right now. Okay? If you guys want to take that impulsive sell, that's up to you, but I'm going to wait till London open, but it does look like it's going to come down to 0.800. That 30 minute made that top wick at 154 there. But anyways, let's go back to EU. So same type of thing when we're looking at structure. This was the last higher low point at 1.2 that led us into this high. We had this aggressive pullback with the CPI data and short-term dollar strength, but starting to make a bit of a support here where if we fail to break these lows, I'm going to be looking for buys above here back up to intraday highs. I'm only looking for sells on Euro USD if the dollar index is strong and we come below 1.207. Did I take a GJ trade? No. You're in the sells, Vikram. I'm personally waiting till London open to wait for GJ trades. Because we still have another 20 minutes till London open anyways. And we're going to be watching the markets till Asian close too. So no FOMO, no rush, having that emotional control. Okay, this is going to be... Don't worry about entering Euro USD now, because this is going to be beautiful if the hourly candle closes like this. Then we get a retest of these highs at London open and continuation up, all right? So you can see this little consolidation zone we were creating here. Yeah, very nice liquidity zone that we're breaking out of on the 1 minute, and the US dollar starting to fade out its strength as well. So if this hourly candle can close above it over the next 20 minutes, over London session, I'm either looking for the high risk, high reward buys at 207 or 2085 or above 21. I'd only be looking for sells below. Am I active in the private channel for sessions? We do these sessions during London, yeah, in the private channel. Oh, I should tell you guys the bad news. Actually, no, we'll wait. Fuck it, yo. Oh, is Monty streaming tonight? Oh, Monty's not streaming tonight? I was gonna go give him a shout out. No. So over the next 2 months, I have some personal family stuff. Not family. I have some stuff going on in my personal life that's gonna be occupying my time, right? So I got a lot more shit going on in the private channel, and for the next about 2 months, because I'm planning on moving and doing a bunch of other different things as well. I'm gonna have to. Well, yeah, this guy, the private channel members already ruined it. But I'm only going to be able to stream on Wednesdays. So refugees are going to be RIP for the 2 days a week. I'll probably still do a market update webinar here and there, but I'm only going to be able to stream on Wednesdays for about 2 months. After that 2 months, then I should be back to normal schedule. You know what I mean? I just got some shit going on in my personal life that I don't want to mention on stream. That's going to be keeping me busy for about 2 months there. You know what I mean? So I'll still be doing some market updates here and there. No, I'm not going to Pakistan. With Rod Bash, I went to Pakistan with this guy. Private channel, they don't care. Private channel is going to be exactly the same, because at the end of the day, the private channel, members in the private channel, the aristocrats, they pay for the value given in Capital Hungry. So that's going to be the same. They still get their 5 sessions a week, everything that's in the private channel, the news terminal, all the key level price alerts and everything else we do, sending updates, Zoom sessions, analysis, tons and tons of stuff. Everything for the private members is going to be the exact same. It's just for the hyenas. It's just for the hyenas for 2 months that I'll only be streaming on Wednesdays, all right? You know how I've been doing Tuesdays and Thursdays? Now, starting next week, it's only going to be Wednesdays with the occasional market update webinar. Yeah, don't be sad or anything, you know? But during that time, remember, you got all of this to backtest. Maybe I'm getting married. Don't forget that during that period, I'm still gonna be streaming once a week. But You guys got, yo, YouTube gets no love. Hyena's gonna starve. What do you mean? Look at all this love. What do you mean? Look at all this love. Yeah, you guys got a lot of resources here. Doctor disrespect. But yeah, you can look at all the stuff you guys got, right? So you guys got a ton of stuff there, so don't worry about that. Okay, so I'm gonna take a piss quick, and then we're gonna come back, look at GU analysis, and what else do we miss? USD CAD. Get the bun. ICT. I don't. I've seen a couple of his videos. I'm not too sure who he really is. To be honest with you, I don't have. I don't know who it is. Yeah, that JP Savage guy. He's supposed to be starting to stream soon too. So you guys can watch him. I just gotta go to the washroom quickly, everybody. And then obviously we're gonna see what sets up for London Open. Bro, Jason, why are you saying that, you creep? Yo, someone kick Jason. That was some creepy shit, bro. Why are you trying to get man sent to jail here? That was weird, eh? You guys read that? This guy said he had a little kid locked in his basement. This guy's trying to get my stream banned, I think. I'll be right back, everybody. Yeah, he said he had a little kid. He's like, I got a little 5-year-old girl and locked up in my basement right now. In my chat, he kept spamming it too. I think he's trying to get my the stream shut up for you know what I mean? Weird shit. Probably fucking. That's for sure. Danny and his boys. It's Danny and his boys. I'll be right back, everybody. Okay. Alright, I'm back. So we got London Open coming soon. Yo, why do these kids keep spamming? Yo, they're trying to shut my stream down. Hey? Yo, look at these Daniel Savage losers trying to shut my stream down with this little kid talk in my chat. You guys are weirdos, man. This is probably what you guys are into, eh? You guys are weirdos. Thank you, Mac. Keep that shit cleaned up. They're trying to get the stream shut down. That's the second account that did that. That's a different account now too. It'd be nice if we get a double bottom in this order block at London Open for buys. We got the support, we're coming back above. Yeah, it's pretty much the order block area if we retest the low of that area and don't break. Yeah, somebody's... fuck, man, that's pretty sad. Why would you try to shut down a free stream with, like, child pedophilia shit? Why are you trying to shut down a financial market stream with child pedophilia shit? It's probably those fucking trolls from the Panda chat. Those Panda... You know the Panda algo guy? He doesn't like us because he's the one that did the algorithm for GoatFX and caused it to crash thousands of people's account. He faked his track records, all that shit. But don't worry, we got receipts on all that stuff. So if they want to keep pushing, that's their fault. But that's why those Panda guys, those trolls, they make pages for us and they troll our streams. That's why they don't go after marketers or anyone else. They pick and choose who. So exactly. So that Panda guy, they fucking they're the ones who did the algorithm for GoatFX and crashed everyone's account. The rocket scientist guy who always preached about track record, and it found out he was editing his track record and manipulating it and then crashing shit down, you know? But I don't know why people are trying to shut this stream down with the child pedophilia tactics. That's pretty creepy. Yeah, it's pretty weird. Shit, man, that gold did a nice little bounce off 1820. I wasn't paying attention to it. Yeah, we're just waiting for London Open now. I want to see how these hourly candles closing, where it's closing back above the range. So if we could make a lower wick at 154, I would like to get buys back up. We did almost retest these previous price sensitivity areas. I wanted better risk versus reward buys at 0.800, but let's see here. EU, we're going to be waiting for the retest London Open 208 or break above 2-1 for EU buys. Okay, so for people with the TradingView charts, you guys should use whatever TradingView feed is closest to the broker you use on MT4 or MT5, or if you trade on TradingView. So you don't have to use the Owanda feed. The reason I use the Owanda feed is because it's a regulated broker in Canada, where their 1 minute chart and their data feed as per price has always been similar to my brokers that I use, such as Vantage and even now Pacific Union. All right. So if you're doing analysis on TradingView, but you trade on MT4, MT5, or you trade on CTrader with a different broker, just make sure that your feeds are matching up. So if Owanda doesn't look like your broker, then don't use Owanda on TradingView, obviously. I've personally been using like Vantage broker when I first started, 2017 till 2020. Then Vantage stopped supporting Canadian clients. I had to go to Pacific Union, and it's always been the same matching up as Owanda, so that's why. Yeah, if you guys, oh sorry, if you guys want to send your charts, I can look at your charts as well. Home user GU entries. Oh, so you entered after that impulsive. This was pretty good as well. I wasn't paying attention to GU at all. I like where you put your stop, and I like that you waited for the break back above these lows as well. Just watch London Open. Just watch London Open doesn't do an aggressive spike down, and we still have this minor bearish market structure respected. Here. Oh, okay. Euro USD, we're going to be looking for an hourly retest of 2084 or a lower wick formed, continued US dollar weakness and above 2-1 buy scalps. Gold, we're going to be waiting for an hourly candle to close above 1820, then get a retest of this order block, fail to break and buy scalps back up. Did I take these gold buys? No, I did not. I did not take any trades yet. No, I didn't take those. That GU trade was a private member's, not mine. I was just looking at the chart. Yeah, if you guys want to send your charts and everything, send them over. We'll look at them until we're getting into London Open here. I was gonna give a shout out to Monty, but Monty's got some personal family emergencies, so everybody wish him well. What's this Macedonians chart? Oh, you're in from Asian session, eh? Bank of Canada is probably going to be optimistic following suit with the other central banks. Bro, this wasn't your stop. Yeah, what a liar. There's a lot of people trying to spam the chat with dirty shit, but I've been trying to remove it. I think they're trying to shut our stream down right now. It's all pedophilia shit. It's pretty weird, but I don't think you guys can see it anymore. No, what they're trying to do is have people on fake accounts spam the live chat with child pedophilia shit, and then report the stream after. Because if you report, because that's one of the easiest ways to get shut down is fucking with kid shit. You know what I mean? So they're trying to post keywords in the live chat and probably comment after with all that child pedophilia shit, and then they're trying to report the stream for child pedophilia, even though it's like in the live chat, you know? Okay, guys, London Open. This is good. Gold pushing down. Pushing down first. Doesn't have an upper wick. Nice bullish close above 1820. It doesn't look like we're gonna get a retest, but I'm gonna be looking for a retest of 1820. Even these candle body highs, which we just sort of did, but I would have liked more cleaner confirms here. Otherwise, if we get bullish candle, I'm gonna be looking for this at this point. Either this, or just looking for a bullish close above here and a quick scalp up to 23.524. GJ closed below 154. Oh shit. Doesn't look like we're getting those buys. JP's in buys. JP Savage rushed those buys, eh? Looks like we're coming down to 0.800. We're going to look for better reactions around 0.800, or let's just see what happens, because we're just starting to create a bit of an order block here. So now on, so now on GJ, either we're still waiting for the same buy confirms above 154.04, where your stop loss would have to be below 9.4, or we're waiting for the reactions at 0.800, okay? So we're either waiting for this, with stops below 9.4 area, or we're waiting for this. Sure. Sure, yeah. My way of trading seems very difficult. Maybe for your opinion, sure. What do you trade? Big red candle, big green candle? Fucking caveman. Big red candle, sell! We go down! I'm just kidding around, bro. Don't take offense to that. You're not a Neanderthal. Oh, you took the impulsive buy scalp, eh? You took that impulsive gold buy scalp? Yeah, oh, you like the 1 minute time frame. Wow. This is a nice trade. This is a very nice scalp. If you got in and out before the London Open. Send your chart so I can see the difference, if it's a major difference or not. This looks like very weak bullish price action still. We're not taking buys unless we come above 0.4. This looks like it's going to come down a bit deeper. So let's just be patient here. No trade yet on GJ. Gold still no trade. Gold, it looked like we're going to get a break above, but the candle closed back in the range here. So we'll look for our 1820 retest. GBP USD retested that order block high we were talking about for entries here though. You would have to break above here to extend buys. Right now, I don't see good entries on anything yet. Euro USD, we're waiting for the retest of 2084. If you... Oh, you scared me, bro. You saw 100... Oh. You guys said, I thought someone said 1,000 points. I thought you said 1,000 points, yo. Someone said it fell. Shit, I read that wrong. Timbuktu, you should be good. You should be good, bro. It's just the sell in May, go away, pull back, you know. You should be good on your long-term stock investments. All right, let's pay attention to gold here to see if we can get an hourly retest. What I don't want to see is us snapping back in the 1820s range, because you can see where we're rejecting here. All right. I want to just get the retest and then start to continue back bullish here and go up to 1828. Sorry, I'll check out your charts, yeah. Don't worry about that. Oh, I think I looked at your gold trade already. Jack Chappell, the guy who makes the economic videos, he has like 200,000 subscribers or 500,000 subscribers. I've seen a couple of his videos. They're very interesting. That's actually a good idea, buying stocks on a discount this week with that aggressive pullback. No, GJ's just in a consolidation zone. We're only taking buys above here. I'm not touching it here. Remember, patience, patience. Hoosa. Squeeze your ears or some shit. Give yourself a smack on the back of the head. You know? The market is always here, but your capital may not be. So relax. GJ's gonna come give us better buy setups, I think, at 0.800, and we're creating some lower time frame bearish market structure here as well. So what I'd be looking for if we do get the drop to 153.8 is the high risk entries, then breaking out of structure. The only way we take sells is below 0.800, okay? Now that we're creating this. So we're either going to do this, we're either going to take advantage of this, break above, breakout entry, retest entry, continuation. This can come a bit deeper if it wants to 153.8. Why not short GJ below the lows? Because it didn't break the lows yet. What time frame are you talking about, Justinas? All right, gold. I'm not really okay. So for gold, I'm not really liking the mix of bullish and bearish price action here. Like, it's really hard to gauge the momentum or not. But what would show me a lot more buyers momentum is having a bullish candle closure above here, then continuation to 24.5 for a 20 to 25 pip squeeze, and failing to break below these candle body lows and these order block highs to the left here. Yeah, go drink some water. Maybe do some push-ups next to your desk or wherever you're sitting right now. Yeah, sure. Just send your chart, Sorrel Trader. See how so if you're in gold or watching gold, if you don't break above these 1 minute highs, then stay out of it, all right? GJ now GJ looking like it might be setting up a lot better here if we finally break above this order block. Same type of idea now I'm waiting for on GJ, but we didn't get the confirms yet. But we're only entering if we go get a bullish engulfing above 154 in the 1 minute. All right. I don't use any indicators. I just use price action, market structure, micro and macro fundamentals. So I use historical key levels based on 12-month fiscal year, 3-month, quarterly, and 1-month periods for historical price levels. And I use certain investing theories like quarter point theory for technicals as well. And then basically just raw price action and market structure. So I don't really like to use any indicators. All indicators are lagging behind price action itself. So it's easiest to see what's going on between buyers and sellers' strength or momentum with the observation of price action. Yeah, one sec. I need to wipe my eyes. For some reason, my eyes burning. This has been happening for the last 2 nights now. Euro USD. Oh, okay, I was about to say Euro USD buys are looking good, but right now above 2-1. We're gonna get another squeeze soon too. GBP USD, we got the retest of that zone. Did anybody take this scalp? Did anybody take that GU scalp? When we got the retest of the order block on London Open there, double bottom. GJ as well looks good for an entry. Hopefully we can ride into the next 30-minute candle too. We got the retest exactly where we were talking about on GU. I just obviously can't go to every chart every second, you know what I mean? We're looking at gold and GJ for a minute. Nobody, yo, didn't you, who else? Huncho, you're still in it, aren't you? Neo, okay, nobody else jumped in GU where we were talking about there? That went 20 pips already. Okay, with GJ now, what you guys don't want to have is this bearish candle close back below the yellow line in order block. If you have that happen, there's higher potential the next 15-minute candle is going to come back down. All right? The Japanese yen isn't as weak overnight as it was during the day. Okay? So, when you're watching price action now, if this candle engulfs the bullish one, GJ will go back in the range and range right back down again. All right, the price action on GJ isn't as clean as GU. No reasons. If you didn't take a trade yet, don't worry, I didn't either. Now this candle closed bearish. You would need this candle to push bullish and engulf above these bodies. Otherwise, we will be probably flipping back into the range here. So you need this next 1-minute candle to close bullish and the next one to close above these bodies to validate more buyers' momentum. Otherwise, the 15 minutes going to close back in the range, okay? So you want this 1-minute candle to close and engulf these bodies here. Then you can validate more buyers' momentum to continue up. If you don't break above there, we're going to come back into below 154. As soon as you break above these 1-minute candle bodies now, you'll get an extended squeeze up. Then we're going to look for a 15-minute retest just to continue up in that fashion. So see how it closed? See how it closed right below? Now, if this 15-minute candle closes back below 154, get out. It's not as clean price action as GJ. It's very mixed. You're getting a bullish push engulfing the bearish push as well, and we didn't close above where we needed to. Yeah, I was telling you guys, if you don't break above there, but don't worry, this is a new 15-minute. If the 15-minute still closes above 154, this 1-minute candle, the next candle goes up bullish, you're still good. But other than that, if it closes below 154, get out. And don't risk any more loss. So it's still closing above 154 right now, which is good. It already has a bit of an upper wick, but we need the next candle to go bullish right now and break above these 1 minute highs. And the 15 minute to flip bullish. All right. Sorry, I couldn't pay attention. Somebody's trying to shut down the chat again. We need the 1 minute candles to close above these bodies I'm showing you guys. Then we'll get a squeeze. We'll get another 10 pip squeeze easily. If we don't break above there, it's starting to show a lot of exhaustion. See how it's still closed below? We need this candle to close above now. And this 15 minute to continue bullish. This is not a good sign. If this candle closes back like below these bodies, this is not a good sign. The next candle will go. We need the bullish close above to signal more momentum. If it closes like that weak back below the bodies, it's not a good sign. The next candle has higher probability to go bearish. It still closed bullish all right, but we need continuation back up. Bro, why are these guys like trying to get this chat shut down? That's so creepy, eh? Fucking lose, probably from the panda thing. But see what I was talking about? How it closed back in that same area, and it wicked it. We need closures above. We didn't get that yet, so this is not a good sign right now. As long as we still remain above 154, it's okay. But if we engulf this bullish candle, we're gonna come right back down in the range. We need weaker bearish candles, more consecutive bullish candles now to continue back up. So this is not looking as strong bullish price action right now, but as long as you have your entry around 154, if we don't close below 154, you're good. But the bullish price action is getting weaker. We had this bullish close back below the range. We had this bearish candle. Now we're having this potential candle but we need it to close bullish now. If I see another bearish candle, it's showing me a lot more buyers exhaustion and potential to go back down. I don't want any candle closures back below 154, and I want us to push up to this range, have a little pullback, then continue breaking above to 154.25. Holy, how many counts are these people making? I can't even look at the fucking price action. All right, so I don't like how this candle made an upper wick and rejected the upside first, but as long as we don't engulf this bullish push, we're still good. We just have 10 minutes until the new 30-minute candle, and as long as we stay above 154 as well. This wasn't bad because this was a weaker bearish candle compared to the bullish pushes we're getting. And as long as this candle closes bullish, it's good. But I would like a stronger bullish body and to push up to like the 1.5 area. I don't want this candle to end up switching bearish and flipping. I just want to keep this momentum going. Okay, so now we're coming back to this price sensitivity area we already expected. If we can bust through it and go straight to 200, even better. But we're reacting on the lower time frame where I expected to. All right, 20 pips. About 15, 20 pips if you guys took the 154 trades. We're almost at the next range though, but let's see. Price action still looking good. Thanks, Sakeem. I appreciate that, bro. This is still looking good as per the price action on the 1 minute. Consecutive bullish candles, weaker bearish candles. I would like to tap the red zone I got marked out now, but I would secure some partials as a scalp. Maybe secure 30%, 40% of your position as scalpers, and then let your runners go risk-free. Momentum's looking good though. Momentum and price action's looking good though. Okay? Now, watch the new 30-minute, because if the new 30-minute pulls a bit deeper to this area and continues up, don't mind it. But we are coming to 0.200's here. I apologize about that. 0.200 PPL's right here. We are reacting to 0.200 on the dot. My bad. So we did do our little 20 pip range, but expect a reaction back to this price sensitivity area. All right? Did everybody get to catch at least 10, 15 pip scalps? Worst case, runners risk-free now because we're reacting to 0.200 psychological price level. For some reason, I had it at 2.5. That was my bad. 0.200 is right here. 154 is right here. So my PPLs are off a bit. Now, we're just having a reaction at 0.200, but we're still very bullish in price action. See how this candle closed with the weaker bearish body and the longer wick? If we close above these bodies, we're going to continue up now still. But just be mindful of the new 30 minutes. Just be mindful of the new 30 minute. Anybody still take those GU buys? That's probably running a lot smoother. Or it got us 20 pips too. Same thing. Euro USD we didn't touch. Gold wasn't looking good with the price action here, so we didn't touch that. Remember I told you we get those days where you run your 20 pip range like butter? And some days where you're doing those stupid candles? This is one of those days where the price action was pretty smooth. Like I ran that 20 pip range, or even if you got an entry 5 pips in, you still could catch 15 pip scalp, right? Okay, we didn't break above 0.200 yet. I think the 30 minutes going to give us a deeper pullback. So keep your buy entries risk-free. Momentum still looks good. Price action still looks good though. Exactly, Huncho, exactly. Yeah, it's not like okay. It's not like we're trying to get. How are we supposed to get 100 pips? This guy's like, you guys are going crazy over 15 pips. Yeah, bro, it's London session. It's not like if it ran 100 pips, we would be in it too. The better entry would have been at this breakout candle right here. At this bullish breakout candle above 154. or the retest at 154, or the bottom of the order block, or a peer squeeze. You know what I mean? The more confidence and experience you get, the better your entries are gonna get. You know. Never say shit's so easy, bro. That's when the market's gonna slap you across the head. But I get what you're trying to say, but you know what I mean too, right? Yeah, I am looking if we can break above 0.200, but right now we're having a strong reaction. Maybe on the new 30-minute after we get a pullback first. Now pretty much to extend your buys, you need the 1-minute closures above 0.200 PPL. All right. Yeah, during these sessions, if you read the description, we primarily use the session volume to scalp. We set up our trade ideas ahead of time, and then we execute when we get the lower time frame confirms. Once we had those bullish candles above 154 or the retest, after failing to break the order block low, it was looking good to take up to 154.2. Right now, we are starting to identify some exhaustion by buyers at 154.2, weaker bullish candles here, more consecutive bearish candles, where the 30-minute candle can potentially give us a deeper pullback or range back down. So let's just see what this new 30-minute candle brings now. Hopefully you guys got to catch at least 10, 15, 20 pips if you got right at 154 entry. But private chat, you guys get to catch that GJ scalp? I'm walking through 1 minute by 1 minute. What else would you want? What else could you ask for scalping? Right? What else could you ask for while we're scalping? Like, we're scalping. Listen. While there's 100 people in the Zoom, while there's 300 people on the live YouTube, while I'm looking at 5 different pairs, while I'm looking at news, economic events, sentiment, while people are spamming pedophile shit in the chat, I still helped you guys. I still walked you through 20 pip scalp buys on GJ with the analysis ahead of time, the entry points, the step-by-step price action to hold the trade or close it, what to look for. Where you're even seeing the levels where we're reacting on the dot. How could you be angry at me? Like, why are you guys so angry at me? But you guys pay people like Daniel Savage. I don't get it. Why would you try to shut this stream down? Like, I just don't understand. Like, I got a full news terminal that we're sharing with the chat, that we're sharing with the YouTube stream right now. We do analysis on 5 pairs. We go from intraday time frames to lower time frame. We do straight 1 minute price action. I even told you guys this 30-minute pullback was happening. And you guys, and there's people trying to shut down the stream with like pedophile comments. That's so weird. That's so low. Right? All right, so you guys, do you guys see what I'm talking about with the price action exhaustion at 154.2 and then the new 30-minute candle doing a pullback? The good thing is this new 30-minute does not have an upper wick yet. So as long as we stay above this little OB here, like I was showing you guys prior on the new 30-minute, it's still valid if we come back above 0.200. Worst case, your runners get taken out risk-free. If you had the 154 entry, So all these concepts are taught in Capital Hungry, but it's a lot for me to repeat. If you're taking the 154 entry or even like that 1 minute candle above, your stop would have to be below these candle body lows. So your stop would have to be roughly 6.5, 7 pips, and then you're going for about 18 to 20 pips. But this is the point where if you broke below here, then your buy trade would be invalid. You get what I'm saying? So this is where you put, and even this on the lower time frames on the 1 minute is still a 1 to 2, 1 to 3 trade, 6, 12, 18. So your stop loss is placed based on where your trade would be invalid. In this situation, if you guys took buys here, or if you took buys here, where would your trade be invalid? Even though I just showed you. No, we said as soon as we fail to break these lows and we have a bullish candle close above 154, we're taking entries. Right? Your trade would be invalid if you break below here. See how the 30-minute candle made that lower wick? Now it's pushing bullish. We still need this 1 minute candle to close above 0.200. Now, if it doesn't and it closes weak like this, now that the 30-minute candle has made its upper wick, right? Expect a deeper pullback down too. So be careful with this now. With the 30-minute candles made an upper wick, we would need closures above 154.2 to continue your buy trades up. You see what I'm saying? But you guys can hold your buys, your runners risk-free now at this point, pretty much. Just to see what happens now. We'll just watch. I gotta go, but do you see what I'm saying? How the 30 made that top wick, but it still didn't break above 0.200, those candle bodies. This is good, but we still need the bullish candles above these bodies, and then you're going to have another squeeze. Gold wasn't looking good for anything to me. Gold's not looking good, so I didn't touch it. Compare the gold price action on the upside and downside here compared to this GJ price action we just had. Like, compare this 20 pip stretch we just had on GJ and how easy it was to validate that break above 154 for the entry, even if you entered here, even if you entered on the retest like we called it. Right? Look how smooth the price action ran from the next PPL. Minor little bearish candles, continued bullish candles, exactly what we want to see. All right? Now your runners are still extended, or if you held your full positions, I only suggested partial closes 40 to 50%, but there was no reason to really close it. I just wanted everyone to secure some profits because we were having this rejection. Now, you don't want any bearish candles to close back below or engulf this. You just want them to stay above 0.200 and continue up. I really got to go to the washroom though, okay? GU gave that 20 pip squeeze. Euro USD we didn't touch. UCAD we didn't touch. US 30 back down to 33,500 key level. Potential high risk, high reward buys if you create a support here. But other than that, gold we didn't touch. GJ we got a 20 pip squeeze here. All right. For anybody who wanted to know the GJ analysis, just rewatch the stream. Trust me. Did we not call this exact order block or trade idea above 154 from? Did we not call it ahead of the stream? And then we got the confirms we needed during the session. Yeah. Okay, wait. Before I go to the washroom, watch all this. These are the highs. These are the intraday highs. A lot of rejection here. Be very cautious here. On the 1 minute price sensitivity area, all right? Be very cautious here. So if we get an aggressive pullback or start to range again or get a pullback like this, don't be surprised, okay? I just gotta go to the washroom, then I'm gonna answer questions when I come back. You guys know what to look for the price action. If you get any bearish engulfing candles below here and below 0.200, you're gonna come back down to these price sensitivity areas. Okay, I'll be back here. Oh man, the trolls are back with a disgusting comment. They're trying to shut down the Capital Hungry stream so badly. This is sad. They're trying to shut down the stream so badly. What the hell? Why are you guys so angry, man? Disgusting behavior. Todd copied my trade and said it's not even his style. Everybody copies Capital Hungry. I'll be back, alright? I'll be back in exactly 6 minutes. That's why JP took our signal as soon as I gave the analysis. He's watching the stream. Okay, what's up everybody? I'm back. Okay, so GJ doing what I was telling you guys. Good thing we majority took profit or closed majority parcels at 0.200. You can see we rejected this price sensitivity area to the left, had an aggressive bearish candle close back below 0.200, then closing below these candle bodies. Still respecting this little order block to the left, but we would have to come back above here to go back to 0.200. Risk your runners could still be active, but worst case you guys got to catch 10 to 20 pips. Daniel's trying to do a Spanish page? Shut up. This guy's fucking doing anything and everything, eh? Let's see what the other pairs are doing here. Gold just going back in the range. We didn't touch it tonight, especially as we're in this messy intraday range now. Nothing too favorable to execute on here. GBP USD went up 20 pips, range back down, but lucky we took advantage of the scalps we wanted to. Euro USD we didn't touch, and then GJ we got those 15-20 pip scalps. So yeah, now that's it. That's pretty much the trade for the day. You know what I mean? That's pretty much it. Was that GJ move? Look at this person caught. This person made $200. Capital hungry, bro. These are crazy. That's crazy, eh? These spammers. Person made $200, scaling up following the analysis. Not bad. On a free stream. $200 on a free stream. Okay, I'm gonna spend the next 12 to 15 minutes just looking at anybody's charts or analysis, or doing analysis on a random pair if you guys want me to do that. If you guys pick a random pair, I'll do a full analysis on it. But after that, there's no donation button for me on YouTube because my account is demonetized. So there's no fucking there's no donation button for me. Bitcoin? USD CAD? German 30? I don't trade German 30, but we do sorry, I do just a rough analysis on it to look at the market structure. But for the next 15 minutes, I'm just going to be answering questions, looking at anybody's charts you guys want to send, or a pair to do analysis on. Damn, bro, you ripped it $200 you made as well? On 0.05s. Guy made back his monthly fee in one session. Good job, bro. Good work, good work. JP only caught that trade because I'm streaming tonight and gave everybody the GBPJPY analysis. Yeah, we range right back down too. It's all good. Look at how this hourly candle's potentially closing. If you guys got to catch the GJ buys, put a 1 in the chat. I just want to see who took the trades, who didn't. If you follow the capital hungry analysis, waited for the break above the order block, waited for that 1 minute candle as well, and then listened to the analysis to hold the buys, took profit at 0.200 area as well. Let's get a nice 1 in the chat. I just want to see who took it or who didn't take it. Looks like a lot of people caught the scalp. 10 pips, still good. At least you got something. Better than nothing and better than a loss. Okay, I just want to see who took it, who didn't take it. Okay, so with this, like a potential sell scalp, right? The only reason I didn't advise anybody to enter a sell scalp, for example, I told you all that if we don't break above here, we can range right back down. But the reason we didn't take a sell scalp is because we are in a higher time frame buyer's bias, and you just took a winning trade of buys to the upside. As soon as you start going back and forth like that in the 1 minute and over trading is when you're going to burn yourself out mentally, lose focus of your higher time frame bias, and then start over trading and losing. So the reason why, even though we expected this pullback here, but we didn't call the sell or to take the sell, was because we just took a winning buy trade, you know? Yeah. So I personally just give advice about what I do, and I don't trade back and forth like that, even if I see the setup, because I know how because I've just been there of how frustrating it can get when you start to over trade, go back and forth with your bias, scalping the 1 minute nonstop, getting lost in that noise. When price tapped 154, where? Were you taking trades before we broke out of the order block here or something? Oh, you're taking buys here? When it first tapped 154? Yeah, that's a very impulsive entry, because one, just because it's tapping 154, you're having consecutive bearish candles, bullish pullback, bearish candle, aggressive bearish candle, and then you have this bearish close below. Then you start to get this order block in consolidation, which shows us a slowdown in sellers' momentum. That's why we were waiting for the break of those candle body highs, or a bullish candle close after London Open created its lower wick and failed to break those lows. We were waiting for this bullish candle entry at 154, or the following pullback, or the next bullish candle. There is where the majority of people entered. This was entering here was far too rushed, because you're hoping that it bounces off 154. You're hoping on that. You're praying on that. You know what I mean? You're hoping, okay, close right there, bounce now. But you're having stronger sellers price action during that time go from 0.200 ppl down to 154, and then you start to notice some exhaustion as you're creating this little order block. That's what's showing down. That's what shows us the slowdown in the seller's price action and the seller's order flow, especially as London opened up, pushed down to these lows, failed to break. So we said if we could get a bullish close. Now above 154, or the retest, or another bullish above it, we'll start to take those scalps up. Because you validate that liquidity coming out of that order block as well, and that exhaustion by sellers. You know? It was a good quick scalp buy, 20 pips in and out, PPL to PPL. Is exactly what we talk about when we say we want it's good that you made it back. Don't worry about that. I just wanted to give you the advice about why that's impulsive. There's no confirms there. And it's nothing wrong that it is wrong that you did that, but don't beat yourself up on it, because I've been there too, where you have these price points of interest and it feels like if you don't enter it right away, you're going to miss the opportunity, you know? And then same idea, once we validated that exhaustion and liquidity grab after London Open, which was here, and we had that bullish candle back above 154, we had that 20 pip squeeze, but we were very cautious at 154.2 before I went to the washroom, because we're going back into intraday highs where if we don't have strong enough volume and volatility, you're just going to see profit taking happening the same way we did. We took profit there too. We're like, yo, 0.200 PPL to PPL, take profit, leave runners risk free. Worst case, the runner gets taken out in profit. And worst case, you banked before. I overcame that with tons and tons of losses and experiences, because there was too many vicious moments where I would be doing something like Michael did and entering on this candle, and then boom. And I was like, fuck, I should have waited for the confirms. And then it would come down to here, make a support and rip up, and then rip up again. And the shitty part is psychologically, the shitty part is mentally, is if you take that impulsive loss, you're going to be looking to revenge trade, or you're going to be in a shittier emotional state where you won't take as much advantage of those cleaner opportunities. What I mean by that is, let's just say you enter here, then it melts and you close at a loss. You're probably going to enter another buy again in the middle of the range here. Then it's going to come down again, you're going to enter another buy. Then it's going to come down again, you're going to lose, then it's going to come back up and go up without you. All because of those emotions chasing. You know what I mean? Yeah, the trades are done for the night now. The only trade executed on was this GJ play, where you either got the full 20 to 25 pips or anywhere from 10-15 pips below that. Gold we stayed out of, but it had a pretty strong sell-off below 1820, but we just stayed out of it because it was extremely messy on the intraday time frames. Mac's crying. Mac went to sleep crying now. But it was very messy here. We didn't break these intraday highs where you can see this previous low, and we didn't break these lows yet either yet. For scalp trades, if we take one win as a scalp, that's it for the day. The issue is too many people will take a scalp, and especially if you win. Okay, so let's think about this and go through the psychology. All right? You all hyenas come on the stream. You have me directing you and giving advice on the markets and saying, all right, this is what I see. And then when I give you that information, it gives you more confidence as well. You're like, okay, I want to follow this too. Okay, wow, that makes sense. Okay? So then we do that analysis ahead of time. And then when the trade idea comes to fruition, we execute on it. So an example of that here is this 20 pip buy. Now, when you're doing this type of group trading, it can really get you excited because you're with other people, you're talking in the chat, everybody got the win. So on top of making money, on top of the analysis playing out, you also have that group influence, and guess what? Your heart rate starts to rise. You get that dopamine hit. You feel very happy. The issue with people is is they start to trade again while they have that dopamine high and while their heart is racing. They'll want to jump in another trade right away. They'll want the buys to fly to the moon. They'll want to look for another entry. They want to come back at New York. Their heart is racing. But as manual retail traders, this is destructive to our long-term trading goals. Because you all know what this does is erases your logical decision-making process. There's two ways to erase your logical decision-making process. One is you're on the dopamine hit and you're winning and you're on a high and you feel like a god that can't be stopped. Well, guess what? The markets will stop you. Because at the end of the day, if you keep trading and over trading, you get tricked on this high. That dopamine hit and that high makes you think and feel like you're alert. It makes you feel like you're focused, but you're not. You just have that dopamine hit. So then you're going to not think logically and you're going to think based on that dopamine hit, that excitement. You're not going to be emotionally neutral. And the other way is, and the other flip side is if you're revenge trading or angry if you just took a loss. That's the more easy to identify side, is when you're losing and angry and we all go, fuck man, I was angry, I started revenge trading, I over leveraged, I crashed my account. But another issue we have to focus on is on the flip side is when people take a winning trade, they don't know when to stop. And guess what? They end up trading for 8 hours straight, trading 2 different sessions and burning through all their profit. Paying their broker pure commissions. Doing nothing but paying commissions or taking a loss at the end of the day. Right? So that's why I like to give these mental reminders. Stay as emotionally neutral as possible. Whether you take a win or whether you take a loss, go do some push-ups. Go outside for a second. Take a breath of deep air. Step away from your charts. And you know why I'm telling you this? I could have saved so much money in the markets my first 2 years of loss. I started trading 2017. My first 2 years was straight losses. I started becoming profitable 2019. Okay? I lost so much money and could have made so much money by doing one simple thing. Turning my fucking screens off and stepping away. My first year of trading, no lie, I lost probably a good 70% of my Royal Bank salary. So my first year of trading, I burned through probably maybe $50,000. Not at once, but through constantly depositing 500, 1,000. Over trading, over leveraging, trying to follow signals, trying to get, you know what I mean? So in total, my first year and a half, 2017 to maybe halfway through 2018, where I didn't know shit, where I was a greedy retard, trying to over leverage, over trade, make $1,000 into 100K overnight, following social media expectations, I probably burned through 50K. I was probably taking every other paycheck, so I was getting 2 paychecks a month. And I was probably taking every other one and putting it in the markets and losing it. You know what I mean? It's only when I started to focus on my trading psychology and understand that this is a game of math and probabilities, and focus more on the fundamentals and focus more on the technicals and back testing, where that 50K I lost at the start of 2018, 2017, now a couple weeks ago, in a week and a half, I made 44K in a week and a half. That's not to flex or say, look at me or follow me. That's just to show you the process, right? And if you come into this chat, after I lost that 50K, when I started to become profitable, I wasn't making crazy money. This is 2019 when I started to get consistent profitability after 2 years of failure. 2019 is also when I started to post on Telegram and post on Instagram and share my trades and share my analysis, fundamentals, and technicals, right? So after the 2 years of failure, it's not like I instantly made back the 50K. It was a slow grind to make that back. I went from like 2019 back then, making $1,000 a week, sometimes $400 a week, sometimes $1,000 in the month, to like, I didn't take any trades because I didn't take any trades this whole week and last week because I made this profit just the first week of May. It's only May 13th now. You know what I mean? So it's not like I'm some type of professional millionaire trader. And it's not like I'm gonna lie to you guys and say that I haven't been involved in the market since 2017. Look at this shit. Look at see this on TradingView? Oh, who's this? How do I go to mine? How is it? There used to be these ideas on TradingView that I could watch that would be that were like my from 2017. You know what I mean? Analysis. Let me go back here. But yeah, you could scroll up in this chat and you could see the analysis and stuff I did, like, and this is when I started to find more profitability, right? But you could see that whole process over 2 years from 2019 to now, but I was in the markets from 2017. Like, look at this stuff. This is from October 13th, 2017. I was probably so dumb wrong here. What is this? This one, gold was at 1305. I was right. I was right. I was right. I was right. What's this pair? This is from 2017 October. USD JPY. Not as good as I want it to be, but this is gold. Yo, look at the levels back then, eh? This is 2017, mapping out levels and stuff like this. Yeah, pretty ugly compared to my charts nowadays, right? 2017, talking about NFP. Okay, it's 2021 now. When you guys say, "Gee, how do you know about inflation? How do you know about all this shit? How do you know about freaking central banks?" I was studying NFP impact, tax reform impact and shit in 2017. God damn, this one was very wrong. What a retard I was. And with tax reform. Wow. NFP week, information on chart. What's this? This is Canopy Growth Corp when I was investing in the weed stock boom. This shit went to like $60 if I wasn't mistaken. This was a straight, I made a lot of money on this. Look at this. Look at this Canopy. When you know when weed was getting legalized in Canada? This is Canopy Growth Corp. Next level, $22. Read this. Read this right now. Next level, Canopy can hit for bankers premium price $22. Then big banks will jump in and buy. Look at that. 2018. I made so much money. I bought $20, the stock at $20 and exit at $40. USD CAD weekly. Fundamental rates are set. Talking about interest rates already. God damn. straight no 1 pip of profit. 20. Oh man. That weed stock is at back to $40. It actually topped off. Canopy company topped off at 60. Here, it'll show here. It topped off at 76. Now it's back to 40. I was in this company, Alvarez, at $3. I was in this company at $3, $13, and $20. Canopy Growth Corporation. And it went all the way to 70, but I closed everything at 40. Made a good 50 racks. This was terrible analysis. I did 2018, 3 years ago. Straight into drawdown. Fucking straight into drawdown. This was so bullish too. Wait, let's go back here. Why was I trying to sell here? Why was I trying to sell here? It is so bullish. We had a high printed by buyers. Look at retard Jeeve. We had a high printed by buyers. We had higher time frame bullish market structure. I was trading fucking trend lines only. I saw this bearish trend line and said we should drop. This was so bullish. Why was I trying to sell it back then? Retard, you know, I was a fucking retard. I was a fucking full retard. And then this is 2019. Crazy times, eh? But yeah. What the hell is happening to my charts? Reese. Alright. Yeah, so I've been involved in the markets for like 4 years now, you know? I'd be on that same shit. Yeah, what a that holy. Okay, though, everybody, I'm gonna get out of here. All we took tonight was GJ scalp buys 20. Oh, Neil, let me check this out. Sure. Back at the 1 minute lows, very high risk, high reward buy. Yo, rejected there on a dime. Neil, I like your balls, bro. Neil always taking Neil reminds me when I used to take very ballsy entries. I like that. If we get a double bottom here and fail to break, this is for sure going back up like how it did here. Or if we create a little bit of an order block. All right. High risk, high reward. Exactly. That's the nature of the beast, right? Scared money don't make no money at the end of the day. But okay, everybody. So just to summarize, I didn't call any trades on gold as we were in this intraday range and we didn't get the confirms at 1820. GBP USD, a 20 pip scalp was called, but we didn't call the live entries on it because we weren't looking at it. Euro USD, we didn't touch because we didn't get the confirms we needed above 1.21. USD CAD, we didn't do analysis on. US 30, we were looking for the sells below 33,500, which played out for 100 points, but we did not call live entries because we weren't paying attention to it. But GU trade, US 30 trade played out. GJ was the 25 pip trade that we called with the live entries and 1 minute price action reading. All right. Don't forget about your key fundamental points that are still very much active. Don't forget about the economic events we have during New York session. And also, as manual traders, don't forget to stay smart. Remember, you can always re-watch the stream at the probably the first 40 minutes of the stream is pure analysis. All right. After that is when we're looking for the trade ideas and executing on the trade ideas. The live trade executed was GJ playing and playing those buys. Right. I'm gonna head out. Private chat aristocrats, private chat elite, capital hungry Illuminati. I'll see you guys later. I'll probably send a New York market update maybe at like around 12, and then we'll do our London session to close the week. YouTube chat, my hyenas, YouTube hyenas. Spam some hyena sounds in the chat. I don't know what that would be typing like, but refugees, the hyenas. I appreciate you guys for coming out supporting. We had a lot of haters who don't like me that wanted to shut this stream down with their child pedophilia comments, but they didn't succeed tonight, you know? That was good. Okay, everybody, take care.